Hey traders, this is Roberto, and this is a video part of the educational trading series. This strategy is called the Big Stone Trade, and you will probably guess why. Because you are entering at specific areas and not knowing if the trade is going to work out or not. Okay, so let me get started. This is what I love to do, and I did take a few trades, is that what I'll do is that I'll highlight. Let me just make this bigger so it'll be easier to see, okay? So I'm looking at a 4-hour chart, and I'm looking at several days of activity, and I'm going back at least a month, and I highlight those areas of support. Remember, market has memory, okay? Hedge funds, institutional traders do this. They look at places of support and resistance, highlight those areas, and usually when a previous resistance or support level is touched, it reacts, and sometimes violently, to that level. So notice just on this chart on the euro dollar how price just recently, okay, reacted to a previous resistance level from May 1st. Okay, so if you're looking at a 4-hour chart and you see the markets in an uptrend, right, that kept going up, and what happened? It hit a previous resistance level at 110.12. All you needed to do was place a trade. There's two options you can do if you can hedge. I don't think if you have a US broker, you cannot do the second strategy, which is hedging. But you can certainly, what I like to do is highlight. I use this rectangular tool, and I highlight this area that was touched previously, and I place a trade. I don't even know if this candle is going to turn into a bearish engulfing candle, which it did. What I'm doing is just placing a trade right there and putting my stop loss 10 pips above the previous swing point. There it is up there. You see that? So I take a trade here, and look at this trade. Just shot down over 112 pips. Now, the other strategy, of course, is waiting for this candle to close, but you miss out on over 40 pips doing that. It's a safer trade because you're waiting to see if the market's going to turn around and head south, which is fine. But this strategy is simply trading at a previous resistance level and putting a 10 pip stop loss above the swing high. Because if you are taken out, it's only 10 pips. Okay? So that's the strategy. So what I do is that, let me clear the screen. Within a 2-month period on a 4-hour chart, I highlight all the support and resistance levels. So what I do is try to find all within that 2-week period or 2-month period. Notice over here. And the further these resistance go, the better. Notice how March 14th, there was a swing high, right? May 1st, there was a swing high, okay? And then today, it did it again. So this resistance level went back, and this is probably one of the easiest trades to analyze because all you're doing is going back in history and finding those areas of resistance that price most likely is going to react. And I like to highlight the entire wick. Like here, I would highlight the wick because anywhere in this area is where price is going to stop. Like this candle stopped here and went down, right? But then it went back up, and within this area of resistance, which is this shaded area, from anywhere from what, 198.87 to 110.13. which is about 20 pips, you're looking to sell. And then your stop loss is above the swing high of this candle here. Okay. Notice again, I'm looking at least 2 months of activity, and look at here. Here was the level of resistance, right? Price came back down and then retested the resistance. So now we've had a swing point, a bottom, a strong support. And what happened? 6, 7, 8 hours later, or actually more than that, this was like from May 12th, an entire day. The next day, it came back to retest the lows. A lot of traders are thinking this is going to break, so they position themselves and start looking for selling opportunities. And what happened? It just turned around and went back up. And went back up to the previous resistance level. And look, we had a 100 pip move to the downside. Let's look at another pair. Again, 4-hour chart. I highlight all the support and resistance levels, right? So up here, I'm going to change this line so you can see it better, because okay, there we go. There's a resistance line. So I use the body of the candle and the wick. Okay, so anywhere here, and look what happened. Price reached this level of resistance, tried to break it, went down, then went back up 4 days later, and that's where you would take your trade. Right at that level, you take a trade at the body of the previous resistance, and price just shoots down, right? And it's just an easier way of trading. Of course, you have to wait for that trade setup, and in the meantime, just use your Onyx scalper to look for those trades. Here, there's a support level. There it is again, right there. There's a support. Price bounced off the support. See it? And then shot up to the resistance and shot down. Okay? So the first time it hits a support or resistance, most likely it's going to react to that level. And that's what happened here. And then that's what happened here. Here was a resistance, and that was the first time. Again, use the body of the candle to find your resistance, and price touched that level of resistance and shot down. There was one on pound New Zealand, and I felt bad because I was long on this, and I had a tight stop loss, and I exited this trade. But we had a long because we had a bullish engulfing candle here, but it didn't go anywhere. Okay, so there it is. There was a resistance up here, right? On the 13th, there was resistance, right? On the 14th, it went back up, right? And then what happened? Here, okay, this is back, I'm sorry, this is last week, right? So there, it kept bouncing off that level of resistance, and it just shot down. Then what happened today? I was looking for a buying opportunity down at the bottom. But what happened? It came all the way back up. Let me make this bigger. Here was the resistance on the 21st, on Thursday. And then what happened? It came back down, right? Overnight. And then today, it shot up. I missed this trade. I should have shorted it. Instead, I was long from lower, and I got stopped out. But there it is, right there. So you take a trade right at that resistance level. This thing shot down, I think, over 100 pips. So if you went to the trade right at the level of resistance, not waiting, that's 101 pips to the downside. Okay. And there was here another one. Okay, here we have, okay, we're not waiting for any candlestick patterns to form. What we're doing is placing trades right at previous resistance level. This is a 4-hour chart. Let's see if this resistance goes back. Let me go to the daily chart and see if there's anything back there. And there is here, you see this cluster, this consolidation area, okay? Price what? Went all the way up to that level. Let's go to the 4-hour chart. And just for what? 2 days from Tuesday, Wednesday, Thursday, right? And then today it just shut down. Okay, same thing at the bottom. Okay, notice support level down here. 1 second, please. Let me just move this thing. We had support here, and then there was a trade there. Then we had this here. We had a support level, tried to break, and it failed. This is what it called a false break. There was no continuation, turned around and went north. And what happened? Came back up to a previous resistance level, okay, right there, and it failed, went down, it failed again, went down, and then came back down to where? To a previous, there was a support, rally, came back to the same place, so there's a buying opportunity, and then rallied, and then what happened? Okay, up here, Tuesday, the 19th, Wednesday, the 20th, Thursday, the 21st, and then Friday, it sold off. Okay, so that's it for this tutorial on support and resistance. In the live trade room, we're going to go deeper into this, and I will call out trade signals using the support and resistance, but I did not want to send any trade signals until I had everyone on board. Here's resistance, which turns into support because it broke it here. And look what it came down to. A previous resistance level turned support. So this is a buy right now. Okay. Have a good weekend, and I'll see everyone on Tuesday. Memorial Day is Monday, so we do not have a trade room in the morning, but we'll start Monday night at 7 p.m. Eastern. Thanks for watching.